The creator of the Bollinger Bands has, for the first time since 2022, given a very important signal on Ethereum. Meanwhile, today's gold chart is hinting either at better times for crypto or at a hard bearish leg for Bitcoin. We'll figure it out together. The story of the last bull cycle and the last alt season is repeating almost perfectly, and I have a very important observation for you. We'll also look at the local setup on Bitcoin's chart and the broader market picture, plus the key event of the coming work week, and of course the macro backdrop. Welcome to the daily Bitcoin and crypto market review. Today is October 20th. After several days in a row of extreme fear, overwhelmingly negative sentiment, and loud voices on Twitter claiming the crypto market is going to zero and that Bitcoin is headed below $100,000, the market has predictably bounced. Once again, it confirms that even when local charts look doubtful and bearish, if panic and disbelief are everywhere and shorts are crowded, you can expect at least a relief move. From our prior daily reviews, the XRP position we caught is already up about 10% without leverage. SUI and HYPE have moved roughly 15% clean as well. Still, let me remind you of our expectations on Bitcoin. Every attempt by buyers to seize the initiative, every local bounce, keeps getting forcefully suppressed by the bears. Locally, Bitcoin's chart looks like a short setup, and with high probability there won't be a proper reversal without that classic liquidity sweep into the 108K 106K zone, and the panic that would come from breaking the psychologically important 110K level. Price has dipped to take that liquidity, even a touch lower, and now Bitcoin is trying to rebound. The local state of the crypto market is as follows. The nearest strong resistance area at the seller's territory lies around $117,100 to $1,895. The liquidation map confirms it. This zone acts like a magnet for price. So, if you plan to short the market, don't rush before Bitcoin at least reaches that region, especially now when sentiment is deeply pessimistic and traders are overly negative. But remember, friends, opening long positions right now is also risky and largely unjustified. Until Bitcoin confidently holds above $118,000, the local structure on the chart remains clearly bearish. This current rise may only be a rebound before another leg of the correction. If we skip the guessing and hype and speak technically, the real signal of a completed correction and the birth of a new bullish phase would be a strong daily or weekly close above $118,000. Meanwhile, the nearest meaningful buyer zone sits much lower, around $96,000, $99,000 per Bitcoin. Why there? Because it would remove the previous correction's lows and trigger the stop losses of long traders. It would liquidate those rushing to buy too early, and it would create that emotional dip below the round psychological $100,000 level, the kind that often precedes a real reversal. Right now, the price is caught between buyers and sellers zones, in the middle of the range. Opening positions here, long or short, is more like a casino. The odds are definitely not on your side, no matter which direction you pick. Another key factor, last Friday, Bitcoin closed at $107,000, and on Monday it opened around $111,000. That means a price gap is formed below, and such gaps get filled about 95% of the time. Sooner or later, that level will likely be revisited, often at the most inconvenient moment. That gap will only close if price falls back to around $107,000, which makes it a clear risk factor. If Bitcoin declines again after this short-term rally, a move down to 107K could open the door toward the buyer zone below $100,000. Now look at how altcoins are behaving. Take Litecoin, for example. The price is rising slowly and steadily, as if luring traders to open long positions. I'm cautious about such setups because the chart shows uncollected liquidity below. Usually that kind of calm, gradual climb happens right before a sharp liquidity sweep. A quick flush to grab stop losses and before the next move higher. That's why from these levels I can't give any trading recommendations or entry points for any specific asset. Even locally, the situation looks too unstable and unreliable. There's another very important detail. Take a look at BNB's chart. During the last correction, the price fell right to $1,000 but didn't dip below it. Believe me, under that level sits a massive cluster of stop losses and liquidations. If price had broken below $1,000, it would have created the perfect psychological flush needed for a real market reversal. But that breakdown never happened. And usually, before a genuine bullish reversal, manipulators do trigger that liquidity first. A similar story can be seen on Solana's chart. The obvious lows where long traders' stops are sitting also weren't taken out. And on Ethereum, we see the same pattern. Heavy liquidity remains untouched around $3,042, $3,060. That empty space beneath the market looks like a setup for a future trap or manipulation. Look at Astra, a trending token from Binance's DEX ecosystem. The price touched exactly $1 but didn't go lower, again leaving the juicy liquidity untouched. All of this, my friends, are clear red flags. Warning signs that the crypto market has left room for another potential sneaky shakeout before any sustainable rally begins. That's why, in today's review, I want to honestly highlight these risks. It's important to cool down your emotions and avoid impulsive emotional trades made out of frustration or fear of missing out. Inside this mid-range zone, it's better to stay patient and avoid chasing random entries, because statistically, those almost always lose. Now let's talk about something truly fascinating. You all know John Bollinger, the creator of the Bollinger Bands indicator. Back in 2022, he posted about Ethereum on Twitter, right near its bottom around $1,000, calling it a bullish signal. That level indeed became the base for a huge rally that followed. And now, he's done it again. Recently, Bollinger wrote that he sees the early signs of a double bottom reversal pattern forming on Ethereum and Solana, but notably not on Bitcoin. And I have to say, I agree with him. If you open Bitcoin's global chart, for example the CME weekly timeframe, it looks as if Bitcoin is already halfway into a bearish cycle. The structure appears weak and fragile. But the Ethereum to Bitcoin ratio on daily, weekly, and even monthly charts looks incredibly bullish. That means Ethereum could soon start outperforming Bitcoin, rising faster when Bitcoin rises or holding steady when Bitcoin dips. The ETH-BTC pair still has significant room to grow. And historically, we've captured many of our biggest profits by following similar bullish setups on Ethereum. Meanwhile, Bitcoin dominance, the share of the total crypto market it controls, is showing signs of topping out. On short-term charts, it looks ready for a liquidity grab down to around 57%, and on the weekly time frame, the next key level appears near 54.5%. Zooming out even further, the monthly chart resembles the 2021 bull cycle almost perfectly. After forming a double top, the pattern suggests Bitcoin dominance may now be entering a long-term decline. So to sum up, Bitcoin currently looks risky and weak, while Ethereum and altcoins are showing the strongest potential we've seen this entire cycle. And as always, when the crowd believes only Bitcoin matters and calls everything else scam, that's often when the real opportunities are hiding elsewhere. Now let's turn to gold, because it's a key piece of the puzzle. Gold recently crossed $4,200, an extraordinary level. On its chart, we're seeing something that looks like a climax move, a steep rally that can't continue forever. Historically, when gold hits such peaks and then slows or consolidates, crypto often starts waking up. There's been a strong inverse correlation. Gold up, crypto cools, gold pauses, crypto rises. If we look at Bitcoin versus gold, the chart is showing a completed double top, a bearish pattern. That suggests either gold will skyrocket further or Bitcoin will lose value relative to gold. In either case, once gold stops its run or moves sideways, liquidity might rotate not into Bitcoin, but into Ethereum and altcoins this time. And here's the key. On the ETH versus gold chart, Ethereum doesn't look overheated at all. Yes, it's technically in a downward trend, but every step down has been a setup for an upward breakout in the past. This structure hints that Ethereum could gain against gold. Another bullish confirmation for the ETH and altcoin narrative. So we're in a situation where Bitcoin looks tired and overvalued, while Ethereum and quality altcoins look undervalued and ready. It's the same psychology we saw at the start of the 2020-2021 alt season. Back when everyone said alts are dead, right before they exploded. This time, though, the alt season might be more selective. With so many overhyped tokens carrying huge FDV valuations, you'll need to focus only on the fastest and healthiest projects. The game is tougher now, but the opportunities are still there. As for the macro picture, this week the Federal Reserve's conference on tokenization, stablecoins, and AI could provide key hints for the next narrative. And with US inflation data and the ongoing government shutdown, markets may soon start pricing in rate cuts and an end to quantitative tightening, both of which could spark a fresh risk-on wave in crypto. So, to wrap up, charts remain king. Emotions deceive. Stay patient, manage risk, and don't chase. If Bitcoin firmly clears 118K, we'll have confirmation. If it dips toward 96-99K, that could be the brave buyer's zone. Until then, wait for clarity, and remember, the candles already whisper the news before the headlines do. Thank you for watching. Wishing you a calm and productive week.